What's good? What's good? Welcome to another episode of Cheef and Chart. It's your man Don Bucks, brought to you by Rap and Dough. You know, the home of money conversations. Mm, 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 mm. Was you tapped in yesterday? If you wasn't, make sure you hit the like and subscribe button so you know when I'm going live. Cause Rap and Dough, we talk about all things Black wealth here on Cheef and Chart. We give solutions, and that is options trading. So if you was tapped in yesterday, man, we had a nice little session talking about what was going to happen today. And it was on the edge. It was real janky looking, but I went with what I thought I seen. And once again, I was right. We got to do what the charts say, y'all. We got to do what the chart say. So let's look at it. Oh, in this episode, I'm tripping. This episode is lemon cake. That's what I'm chiefing. Lemon cake. And wake up and trade, y'all. That's the name of this episode. Wake up and trade. You know why I named it that, y'all? Because I messed up again. See, I be up burning the midnight oil because I really do this. Like I really study my craft because this is how I make money. Right. So you should be taking this approach as well. But we have to find balance because I woke up kind of still foggy, still sleep, rushing to the screen. Because yesterday I had that play in that was looking janky because we wasn't sure if resistance was broken. Right. We didn't know what was going on right there with this bar right here. Right. But it didn't have much conviction, even though it was a retracement. At the end of the day, it didn't have much conviction at the end of the day. But now, looking back, look what happened this morning. It gapped down, which is what we thought was going to happen anyway, because we see the weakness in the daily, right? We see the new low in the MACD. So this strength, that green bar, that's the strength I'm talking about, is going to be short-lived. Lo and behold, today we have a red bar. That's what a momentum divergence is. When you see a new low in the MACD with the corresponding green bar, get ready for a pullback because this is a fake out. Let's just say that. But it's retracement after this down drag. It's pulled down, all this red. That's regular price action. It has to retrace at some point. But there's a level here. Not only is it a level here, but the momentum indicator says we're going down, that blue fast line. It shows a new low. So why would I do calls? Because I see a green bar. Now that you know that you need a MACD indicator, you can look at the MACD indicator and scroll right up and see what's going on with the price bar. But we can't see exactly what's going on in that daily bar, remember? So we have to drop down into our trading time frame. And this is what that bar looked like. It's these four, that one bar is these four. So we can surmise that it went up and stopped right at the level. Right? If that's the whole bar, right at the top, it stopped right at the level. So this morning, it did what it was supposed to do, like we kind of said was going to happen today. So it did that. And of course, if you was tapped in yesterday, you know I'm in a stock that is in opposition to the SPY. So you know we keeping an eye on the SPY, SPY, the ETF, because that represents the top 500 companies in the stock market. So whatever the SPY is doing, a lot of times out of 10, your stock is going to be doing to some degree. So we want to know what the SPY is doing so we can know what we're doing with our stock, especially if it like correlates. I mean, because most times the charts will look very similar. Like you look at your stock and it'll be doing kind of the same thing the SPY is doing. So that's why it's a good idea to keep your eye on the SPY. So it did what we said it was going to do. But guess what I did, y'all? So remember when it traded against me? So let's look at it. It went against me. So remember I was buying those contracts for cheaper and cheaper. So I ended up with 4 contracts. I didn't want 4 contracts, but being that it was trading against me, I was getting the contract for cheaper. It was like, why not make my average buy-in cheaper? As long as I wasn't over leveraged, because that's what I mentioned yesterday. You'll want to add to your play as long as the parameters are still intact without going past your emotional threshold amount, right? So I got to that point. I ended up with 4 contracts. So this morning, when SPY gapped down, mine gapped up. So where is it? If this is today, all right. This yesterday? Yep. Here we go. Right here. So I was bought calls here and it traded down. I'm like, damn. But I know the daily says strength, and plus the SPY is weak. So if the SPY is going down, mine is going up. So I seen a new high in the MACD, so I was buying this weakness. You feel what I'm saying? I was buying calls into that weakness. So it started trading down because that's that one bar from yesterday. It's 1, 2, 3, 4. So it started trading down, and I was buying contracts as it was going down. I'm like, fuck. So this morning, when the SPY gapped down, mine gapped up. So to take some risk off the table, because I didn't want to have 4 contracts. So when it started going up, my plan was to sell 3 of those contracts at the price I paid for them, or a couple dollars profit, right? And leave one on the table for it to run to where it ran to. Moving off fast, cloudy, still half sleep. I didn't look at the exact order I was making. I was making a sell order, but instead of like taking the order down to 3, instead of leaving it as it was going to sell the whole thing. My whole position was 4 contracts. So instead of like toggling down to 3, it sold all the damn contracts. Sold all the damn contracts. So it didn't even recoup all the money. I was still like, if I would have if it would only sold the 3, I would have still had the 1, and I would have recouped all the money. But instead, it sold all the damn contracts. So I was down. I ended up not being as down as I was. I was down 150. But after it came up and it just sold all the damn contracts, I ended up only being down like $30. I was tight this morning. So I said, you know what? I'm gonna wait for a retracement. Kept my eye on the SPY, waited for a retracement, and because the parameters were still intact. Still a new high in the MACD, right? It still had room to go to the 30, because that's where I'm taking it. The next level up is 30, right? The next level up is up here. Let me make the screen bigger so y'all can see what I'm saying. So the next level up is right here, 30, from where it's at. It's right here. So I'm taking it to the next high. which is up here. So that's what I'm taking it to. But I had to wait for it to retrace because it was shooting up crazy this morning. Look at this. It did this morning, then it just kept going. I'm like, all that profit. The small account that I started with $100 would be about 6 and some change right now. If it would have executed like I planned for it to execute, but you can't beat yourself up. Like I always tell people, it's always going to be another setup. So once again, here's another setup. So I waited for it to retrace, and here it go. This is the retracement, and I'm taking it to the next level, 30. Why? Because the daily says a new high, right? We're not outside of the Bollinger Band anymore, right? We're back inside, so it's not extreme yet. It's touching it, but I got time on the contract. It's, like I said, it's not extreme yet. New high in the MACD. We got retracement too. Look, we got retracement. So this is going to come down possibly to about 27 before it bounces and keeps going. That's what my edge is saying. Right? But if you haven't already, make sure you hit the like and subscribe and the notification bell. Most likely, mainly the notification bell, because you want to be notified for when I'm on here giving y'all the play. Man. So look what's going on. Just to recap. So the SPY tomorrow is looking like this. What do I see? I see a new low. I see weakness, right? So any strength in the lower time frame is going to be short-lived. How short, we don't know. That's why time is your friend with options. You want to get, time at least 2 weeks. Nothing shorter than 4 days. But right now we're going into Friday and the weekends count. So why would you get a 4-day contract? So some of this stuff is like common sense. You wouldn't get a 4-day contract if the weekend is approaching, right? So we see weakness, but we're in a range here. So let's drop down to the trading time frame. So here's a caveat. When you see ranges in one time frame, you can drop down to a lower time frame and see a trend in it. So if your typical trading time frame, the one that you always trade, is in a range, you might have to, because you pick your trading time frame based off of how long you want to be in the trade, right? I show y'all how to do that in previous videos. So if your trading time frame is the 2 hour, because the 2 hour offers 2-day swings, but right now your joint is in a range, and trading in ranges is not the ideal trading environment. So if you don't want to trade in that range on your trading time frame, you can drop down, but yes, you also have to alter how long you're going to be in the trade. So if you're dropping down in the trading time, dropping down and changing your trading time frame. So let's just say, let's see what the hour look like. All right, boom. It look like a little range in here too, but this is something that you can possibly play. So let me look at the half an hour. All right, so let's do, because we need a relatable. So if we're changing our joint from the 2 hour to the hour, right? That look like something we can play around with. So this looks different than a 2 hour. This looks like something a little bit more tradable versus this one. It's like kind of tight there. Whereas though in the hour, you got a little bit more action, right? So here, you might want to take, I'll wait for a retracement on this one. So one more green bar too. And I would probably short the middle of the Bollinger Band. You know what I mean? Wait for it to hit here, pull back. But the point here is if you're trading in a time frame that's in a range, you can drop down to a lower time frame and find something more tradable. That's the point I'm trying to make. I didn't mean to go off on a tangent. But what I see as far as the SPY, I see weakness. And if you drop down to the lower time frame like mine, see we have strength here. This strength is going to be short-lived, and I would assume it's going to go. I don't believe it's going to go all the way back up to 370 tomorrow. I believe it may go to maybe 365, maybe 366 before it continues down and test 360. That's what I see. It's okay to be wrong, but I've been right lately. And we're just doing what the chart says. It's nothing I'm doing. We're just looking at the chart and understanding what the chart is saying. And I hope I'm giving it to y'all clear, with the momentum divergence concept, support and resistance areas, right? And how these different time frames correlate with one another. So tomorrow, I see this retracing a tad to around 366, 365 before it continues downward. So I'm in my play, I'm in this. And if the SPY is going up, mine is probably going to retrace because it already started. Probably going to retrace down to about I don't know. It might retrace down to 2750 before it continues up. That's what I see. It's your man, Don Bucks. Make sure you hit the like and subscribe and the notification bell. If you want to learn how to swing trade like this, feel free to hit the description. Till tomorrow, always remember, ain't no competition. Always you versus you. See y'all tomorrow.